GM guys. Can you guys hear me? Let's do a mic check. All right, so everything sounds good. Everything sounds good. Okay, guys, I just lost my Instagram account. Um, I just lost my Instagram account yesterday, so I did an appeal, and I somehow just couldn't recover it. It's been happening in the past couple of days. Every time I post, they'll just say you're violating the community rules or whatever. Like on my stories, and most of the time it'll be like on my stories. If I post like an execution, um, yeah, and we just ban it. Okay, ban the account for like maybe an hour or so. Then I'll just appeal, send the verification, and do everything, and then then they'll bring it back. But yesterday I just couldn't bring it back because it's been happening for like the past couple of weeks now. And yeah, so we no longer have an Instagram account. I don't know if I'm still gonna revive it, but they told me that I can no longer uh, recover the account. So you can see here on my uh, X, I did post about this, and this is the Psychedo underscore capital. I'm gonna try and build. I mean, the content that was there, guys. I mean, the history and everything there. I no longer have those photos and the videos. I shared a lot of. I think this account is one of a kind, man. I shared a lot of value on this X. I don't know if I'm still gonna be able to, share the same value, or because the come up. This was where everything started on this account. The first day I posted, I really am disappointed by this, but what can I say, man? What can I say? So, but yeah, we no longer have this account, Psychedo underscore capital. I don't know if they're still gonna give me this name because I want to bring it back on a new account. And so basically, this is what it did. We've reviewed your account and found that it still doesn't follow our community standards on fraud and deception. I don't know. Maybe the $1 million model is is causing all this trouble, because it is a menace. If maybe those are the captions that caught me here. I don't know. Maybe the new account's still gonna get banned, but it's fine. We move, life goes on. What can you do, man? What can you do? So I am going to open a new account. Yeah, we'll see. And then I'll just start posting on that one as well. Maybe I'll be more active on that one in terms of posting reels and some educational stuff. Try and match, the same like value that this one, had, even though the following was not um showing. I think the following, even on my ex, the value that I offer to you guys is, I think, it's not equal to the following that I get. So, but it's fine, I don't really mind that. Yeah, but yeah, that's it. Those are the sad news for the day. Kindly follow me on X as well. Let's engage on X, because I don't even have the appetite to post on X because of like the engagement and stuff. But I am learning these things, and I'll definitely get better at them because the online presence is the future, you know. So we all want to be present online, you know, but that's not where we are. So you're going to be reviewing Tuesday. We don't have a rate for the news, as you guys can see. We're not going to make this a long review. It's just going to be a very quick one. We're already at 7 minutes now, so I think I have like what less than 7 minutes to go. So I don't want to make it like a 20 minutes video. Just want to keep it at 15, 14 minutes. So I'm going to review Tuesday and Wednesday. So already on Wednesday, we also don't have rate for the news event at during New York AM. So we trade pre-market. We had minutes at 2 p.m. So minutes are not the same as that's FOMC statement, so it's not the same thing. That's the difference. Minutes is just they're not as volatile. They're not that impactful, but they could sometimes be impactful because of, you know, these events. Actually, they allow for manual intervention, so they can pull it whichever side, however long. So you don't want to be there, right? So you want to trade early in the morning, pre-market, because after they open at 9:30 they might start consolidating. Okay, so I'm going to review that yesterday, and I'm going to review Tuesday, because today is what, it's Thursday South African time. I think it's still Tuesday in the US, so don't mind me when I'm saying today, tomorrow. I'm just referring in South African time. Sometimes, you know, I just, you know, it depends on what I'm referring to. Okay, so I'm referring to the date. If I say yesterday, talking about the date, then sometimes I might be talking from South African, you know, perspective or citizen perspective. So here we open. I'm not gonna even go on the hard time frame to show you what was there. So you can see here we have what, clean sell side liquidity, relatively equal lows. These lows were created um, at 4, which is London relatively equal lows. And then we also had these relatively equal highs, right? This high is relatively equal to that high, but this is the high that was most important because this one was formed what, after 7 o'clock. Look down here as I point to these highs. And this high was also relatively equal to that high. So relatively equal highs here. I'm watching that. And I know that I'm supposed to be trading pre-market, and I don't have read for the news event, and I must rely on the macros to give me that displacement. So if the entry or is formed inside the macro, it becomes a high probability trade for me. Okay, so when we open at 8:30, I have to always, guys, I always scan for where was it smooth after 7 o'clock. That's like a look back. So I go from 8:30 to 8 o'clock, watch that. Was there any smooth highs or lows that were engaged pre-market, and that caused a market structure shift after that? Then if yes, then I know 880 does not need to go external to that range anymore. It just can be a continuation already, but we don't call it a continuation. It's a reversal still, but it will just either give me the displacement to give confirmation, then I just enter on that fair value gap as a short, or as a long, depending which side of the market was engaged. So in this case, we had relatively equal highs here that were swept at 820, and this is like me waiting to see if this fair value gap is going to fail to hold, and it does right there. So that's like a first sign that, okay, now it's bearish. It doesn't want to go above this high anymore. We have an inversion fair value gap here, and then we have this CB. So I'm watching this CB as we go into the macro to see if price is still going to respect that. I want to go short. I already have identified relatively equal lows here, and these lows here, which I liked. And there was this low here also, and then there was this low from yesterday, the previous day, which was Monday, New York AM. Okay, these are all the levels that I was interested in, right? I did not necessarily have a bearish bias, but these levels were very close and they were very smooth, so I like them. Okay, excuse me. And then now we then looking at the bodies. Obviously, this week goes all the way up. The body is left. It doesn't even come close to that fair value gap. So that's bearish to me. Then I wait because I know I want to rely on the macro. It's fine. If I miss the trade, then I'll just wait for the next macro, which is also, it falls under the pre-market, the 850, 952. Sorry. I'll wait for the next macro. Okay. This was actually the last macro of the pre-market because the first one was at 750 to 810, which is the one that I also like to trade, right? If the structure is in agreement with time, because I have to follow what the calendar is telling me. If the 750 macro to 810 is ready and is showing me signs and I can see the structure is in agreement with time, then I can execute and trust that. But if not, I wait for the next one, which was in this case the 850 to 910 macro. Remember, we open at 930, so this is the last macro before the open. The next one will be after the opening at 9:30, which is 9:50 to 10:10, right? So I want to trade this one. At this point, I already see that, okay, I just need that extra confirmation. I'm looking for an entry at this point because the confirmation was there when we inverted this fair value gap. And then we come all the way up again, fill this fair value gap. And then remember, I still have this inversion. So the bodies are still inside that inversion, even though it closed outside of this CB, we are still inside of that inversion, right? And then we drop again, close bearish below the opening price here. This was a sign to me that, okay, now I'm ready, but I'm waiting for the macro and for price to retrace inside this fair value gap for me to go short. I wanted to use this high as my stop loss, but I said, okay, let me extend this fair value gap and study. As soon as we get inside the macro, I want to use the high that's gonna be formed inside the macro. A swing high, then I'm gonna use that as my stop loss and short the market so that I have a bigger RR and so that I have like a small stop loss. Okay, that will obviously increase my risk to reward, right? So I wait as we enter the macro here. We leave a swing high and then we close bearish below this candle. I enter this candle's close, the body close. I use this as my stop loss. It pushes lower. It takes out these relatively equal lows right there, and then it takes them out here, these relatively equal lows, and then it pushes, it takes me out right there, right? And then it drops again, takes out these relatively equal lows right there, takes out these lows, but I'm still interested in these lows here and that low, this low and this low right here. They're very close, okay? And they were very clean. So I didn't see it going above this high. I thought if it's gonna go above this high, it has to first clear these guys here. So I looked for a second entry. That was now after I mean that the entry that this fair value gap was left at 906, which is still inside the macro. So we came back, reclaimed it, and I went short inside this macro's fair value gap right there. It was no longer macro at that time, but it was I'm using the structure that was created or formed inside the macro window. Right, I went short, stop loss above this high that trailed me out initially here, and then bang, it went all the way down, and it actually gave me what I was looking for. So this is what I was looking at. If I were to just show you the whole thing, we have relatively equal highs. 920 takes it out, and then we close, but we create this inversion fair value gap, but also not just that, you also close below this lower fair value gap. This was a confirmation, but I couldn't go short here because we had this fair value gap left open, right? And I was also interested in trading inside the macro now because I could see that there is a lot of fluctuation up and down. I didn't want to trust this and use this as my stop loss and think this was going to be um, a breakaway gap, but rather I just waited for price to enter inside that fair value gap and also for time to align, right? And then when I saw the swing high, a swing high is a high with the lower high on the left and on the right. As soon as that was created inside the macro, this is how I catch the big RR trades, guys. Okay, this is how I catch them. So I use this swing high as my stop loss as soon as I get the change in state of delivery inside the macro. So in this case, it was that candle closure outside of this fair value gap. Then my stop loss was here, so this is how it looked like, right? The first short entry, sorry. it was these candles, and my stop loss was just above here. And this was my trade, right? So I wanted to target these lows and get a nice 3 point something R. Got trailed out right there. Then this was my second entry. As soon as we entered the CE here, this one was just, it went all the way down. And this one delivered right there. So it was like a 4R-ish, something like that. 5R, somewhere there, 5R, yes, somewhere there. And yeah, the logic, I just told you the logic, all right? So it's just me looking back 30 minutes. I looked at where are the smooth edges. So this is like 8 o'clock, and this is the opening at 8:30. So I look back 30 minutes, I can see where these highs were swept. We had these relatively equal highs. So this is why I'm saying this was a 30 minutes look back. Had these highs, maybe let's say these highs were formed between 7 o'clock and let's say 7:35, that was going to be like a 60 to 90 minute look back, right? So you just add another 30 minutes like that. So, and then you see where the smooth edges are that you can target. In this case, I had these relatively equal lows. These are pre-market range lows. And then I was using also this leg here to aim for that -1 standard deviation. Okay, and also if it aligns with that level, it gave me the confidence to hold when this drop was happening, right? And after I posted that trade on IG, that's when I got banned. I don't know, maybe it was too good, but this was the execution that I shared on my Discord with the Discord members, as you guys see here. Okay, and you guys asked me to explain how this trade came about. What was the thinking behind it? It was a $1 million model, as you can see here. $1 million model, but with a look back, okay? Because I told you this was my second entry right there. This was the execution and the the annotations on the day, right? And I asked you the first one, I asked you who took the first entry, and no one replied. I thought you guys saw that one. It was pretty easy. I was not live, but it was just an easy one. Okay, now let's go to yesterday, right? Let's go to yesterday again. Yesterday, I'm talking about Wednesday, the 19th of August with FOMC. So we trade pre-market. Let's look at what happened or what transpired on the day, right? So let's remove this midnight open because it's from that day. So this one was an easy one. It was very easy, and we had a long range. I don't think I was gonna hold for this because I did not really see this pump on gold. Not like this. Okay, came too early. Okay, 7 o'clock opens. It's relatively equal highs, relatively equal lows, and then we open at 8 o'clock, right? You sweep these relatively equal lows. So now this is the first marker you can trade if you're going to be trading pre-market. Once you see this, because there was a change in the state of delivery right there with the fair value gap. This was a nice long. Actually, I put this at the wrong candle. There's an up close candle right here. I'm gonna zoom in on this. Yeah, this change in the state of delivery. This was a nice long entry, and you target the pre-market range highs, right? For a nice 1:2. If you can get a minimum of 1:2, then you're done for the day. You are done for the day. This was more than a 1:2. This is our $1 million model, bullish reversal. That was for the structure was in agreement with time, which is what the calendar was suggesting. Trade very early, okay? And then boom, it went all the way up. Suspension block here. Also with this breaker, dug into that. Then boom, another impulsive leg. We have this breaker, fair value gap. That's a unicorn. And then from here, it never looked back. It went all the way up. it went all the way up, right? It kept pushing, and even now it's still pushing. So look at this range here. This was a very quick one. If imagine if you held, if you're bullish on the day, which I was not, could have easily made like a 48R. So with 1,000 risk, you could have made 40,000 US dollars. This is not something that you should think or aspire to, to do, because it doesn't happen every day, guys. Okay, you can do it, but if you catch these moves, the 1:2s, 1:3s, 1:4s, those ones you can be more consistent doing them. Because if you try and think you're gonna try and catch this, in most times than not, you're gonna cry, my friend. So you're not gonna make it. You're not gonna get that. So this was just an easy one. Again, I did not take this one today because I was late to the party. Okay. Actually, I didn't even want to trade today. I didn't think it was gonna be this clean. So it's fine. I didn't have the app, so I didn't look at the chart until the price was somewhere pushing above I didn't even see this retracement. It was just pushing out, and I was like, oh shit, I'm late. I missed the 750 macro. I thought maybe the 850 macro was gonna deliver, and unfortunately didn't. So I was late. And yeah, guys, let's keep it here for today. I'll see you guys on the next one, and be on a lookout of the new link on Discord. I'll share it on the announcement channel as to what's the new Instagram link. Okay, I'm still thinking about it, and yeah, I'll see you guys on Discord. Ciao, ciao, ciao. All right, leave a thumbs up if you enjoyed the video, and yeah, cheers.